Good morning, traders. It is Tuesday, May 13th. I just recorded the video, went to edit it, and realized the microphone was not turned on. So I'm going to fly through this one to get this out in time-ish. Anyhow, let's take a look at what's going on in the markets. We have, yesterday was a huge gap up on good tariff news. The market surged higher. Depending on which strategy, if you are trading our signals with us, then you are up 3 to 8% yesterday with our ETF trades locking in gains on that move near the highs. Overall, we had FOMO on the markets yesterday, short term. It wasn't significant, as big as I thought it would be, but overall, when we have FOMO in the market, we tend to see a pause or pullback. So I wouldn't be surprised if the market pauses or pulls back. We had FOMO a few days ago. Of course, it creates a short-term top and the market pulls back. We've had it several times. It puts here and we see a pullback. And then, of course, we got the flip side. We got when everybody panics and sells out, creates these oversold dips. Again, this is all our short-term analysis going from panic to overbought to take a pause to overbought. When we are in green bars and the trend is naturally up, we're going to consistently be hitting FOMO. It doesn't mean you sell short. It doesn't mean you exit your positions. It simply means in the uptrend, we're going to keep bumping our heads with an overbought condition. It just means it needs a pause, a breather. It needs a little pause before it goes higher. It needs a pause. The opportunities for short-term traders are when the bars are green and we're in an uptrend. The panic selling is where it's like you can buy the dips, especially when they come down to a key moving average like this pink line, which is the 20-day moving average. But anyway, all that, we do cover that in more detail here and there. Looking at the short-term charts, let's go to the SPY. One of the members was talking about, look at the spikes on the chart here for the S&P 500. We had a huge spike down yesterday in pre-market. We also had another big spike down in post-market. I have covered price spikes before and last week, I think. Here's one from a couple days ago where in pre-market, you'll notice in pre-market, usually around 8 o'clock, when there's very little volume, we usually get some price spike. And I have these lines set at 33%, 50%. Depending on the trade, it could be 75% or 100% of the move. And typically we see this in pre-market. And then once the market opens, which you can tell by the volume bars here, obviously regular trading hours is where most of the volume trades. From there is usually when price will run up and try and hit those levels. Now that works in a normal lower kind of market environment when volatility is low. But when we have huge moves and massive momentum shifts, giant price spikes actually have the inverse relationship. It doesn't mean that there's a lot of downside opportunity. It actually says there's so much momentum. I don't know why, but this is what I've noticed over many years, is if we have a huge momentum move to the upside, which obviously if you look at the daily chart, we have very strong uptrend in place. And you get these price spikes, especially after huge news. You can't count them. In fact, they go from being like a bearish sign, meaning price is going to come down to fill these levels, to it's actually going to continue to go the opposite way. And it's funny enough that this morning we actually have the most recent price spike is to the upside, showing that we could go all the way up to about 587.44, somewhere in there. Look at this. We got another price spike forming here. So we got some crazy volatility. These big ones are the ones I don't trust. It usually means we're going to go the opposite direction and go higher. It's these smaller ones that are interesting. Now, yesterday at the end of the video, if you didn't watch it, I touched on TEDx I touched on Fibonacci theory. This guy goes into it about nature, and then I kind of touch on how it goes about into our trading. So if you haven't seen that, check it out. There's some interesting analysis, and it's a very good video to watch as well. But let's take a look at some economic cycles here, some really interesting price action that I don't think I've ever gone through this whole thing. I'm going to go through it very quickly because I just did it with no microphone. But I believe we are in a stage 3 topping phase and the market is about to go into a financial reset. All kinds of things are signaling that to me. Whether I'm right or wrong, it doesn't matter. We just need to be prepared. If it does, awesome. If it doesn't, awesome, we'll continue to be long and ride it up. So it doesn't matter from a technical standpoint, but my experience and all the stuff that we watch, which I do explain here and there and time and time again, that things have been slowing and maturing for a stage 4 decline. Right now we have institutions unloading shares, big volume, intraday and in pre-market and post-market, and to the general public. Retail traders think the dip is over. Buy the dip mentality. It works almost all the time, but when it doesn't, you blow up your account, you downgrade your lifestyle, it is not a fun scenario. So we always have to protect ourselves on every pullback, because we never know which one is going to be the one that actually kills us, kills the account. And that's what we do. So right now, I believe we're in this phase right here. We're just waiting for it to stall out and go into this huge sell-off, which is going to put a lot of people through anxiety and depression and blow up their retirement accounts. Now, as we know, gold tends to do very well near a stock market top. Good example of this is our comparison chart that we have here. We've got a couple comparison charts. Overall, if we take a look, we've seen the stock market have a huge sell-off, and now it's had this big rebound. Gold has outperformed and skyrocketed and started to kind of put in a bit of a top here. Well, if we go back to 2007, 2008, the stock market had that huge correction, and then it started to bounce, and gold also put in a significant top. And what came after this, and again, this big drop down, if we actually take a look at, let's just see where it is here. That's not the one. This is the one. This big drop that we saw back in 2007, 2008, huge first big spike of everyone going, oh my gosh, could this be a bear market? What is a bear market? They start to do research on it. Well, we've just had the same thing now. So that, is another thing aligning. Now, if we take a look at what happens obviously next, if we just scroll forward, gold has puts in a top. The stock market starts to pick up speed to the downside, and gold holds its value still. It actually starts to move higher as the stock market starts to crash in a big way. But eventually, real massive panic selling hits in the stock market, and suddenly gold pulls back with it, and we see gold pull back quite substantially. This may not look like much, but this is a 34% pullback in gold. The stock market ended up putting in a 57% correction, which is life-changing in a bad way if you're on the wrong side of it. Gold tends to bottom first and will take off, and that's what we're waiting for right now, is this pullback in gold. If we were to fast forward this, we'd be looking for the stock market to eventually roll over and then go a whole lot lower. You'd have to shrink this chart way down. And gold eventually will pull back as well and create this opportunity for gold and miners and all that. Maybe not miners quite yet. We'll have to see how they perform, but definitely gold will start to perform and build a base and then get ready to take off to that next level. So that's kind of where we're at in the grand scheme of things there. So that is where we kind of stand, where I believe gold performing very well at a major market top, and the stock market is starting to go down already. Now, this is the one that I haven't showed in a while or ever, the economic and the business cycle. Now, the stock market over the last year or so has been pushing higher. We've had AI, all of this stuff. We've had innovation, and now everybody is adapting and bringing AI into their business. People are trying to expand, and they're ambitious about the future. But the reality is, the stock market is already starting to go down, and usually everybody is the most kind of bullish and excited, right at a market top where the economy goes off a cliff. Stock market's already telling us things are slowing, but the economic data and business mentality, business owners haven't seen a recession yet, where wallets snap shut and nobody spends money anymore. And then it's going to be like signs of slowdown, which I actually think we're already starting to see signs of slowdown with earnings. And then we see the market start to collapse, and all kinds of stuff happens with business owners. And eventually we go into massive bankruptcies like we saw in 2008. Unemployment spikes up, and banks and all that stuff holding all the debt get in some serious trouble. So that's kind of the scenario of where we are. We're in this cut, we're kind of right in this void here. The market's already started going down. Economic data is weakening and flatlining, and the stock market's probably going to pick up speed. And then eventually the data will align. As the data really starts to turn south, the stock market will already be down dramatically. And people will be like, oh, that's why the market was going down. As investors, we follow price, and price leads economic data in most cases. Okay, quick look over at gold. We have seen gold have a big pullback. It may not look like much, but gold pulled back 3.5% yesterday from the previous day's close to where it is. That is a massive drop for gold. Silver held its ground. Silver barely even budged. It traded sideways. It really just pulled back about 0.9%. It traded flat, and people are wondering, oh, silver could be the one to be in. Or why is there this? Why did gold crash $100 an ounce and silver really just did nothing? To me, it's simply gold was a little bit of the crowded play in the market, and whatever goes up the most, whatever is outperforming at a certain time, as soon as that momentum stalls, it's also the one that pulls back the most percentage-wise. And silver hasn't gone really anywhere. It's not even trading above highs from a couple months ago. So it didn't really have any momentum. In fact, it had momentum, but it's been taking a pause. It's trying to build a launch pad to maybe have a push higher, but we'll just have to see. But that's why gold pulled back. It was kind of more so just a lot of people who have been moving into it to try to make money, I think, instantly decided, oh, I'm going to get out of gold. I'm going to move into stocks. And we're actually seeing like small microcap stocks. The volume's huge. We're seeing lots of volume, people moving into aggressive stocks. The Russell 2000 and small caps had a big performance day percentage-wise, and big money was flowing into that. So people are piling into the risk-on trades. And that is a sign that they're getting confident and comfortable and expecting higher pricing. Let's take a quick look at Bitcoin. With the band strategy, we are still long Bitcoin. We have already locked in some gains. But overall, it rally. Whoops, let me just get it here. You can see pretty straightforward strategy: rally, pause, rally, pause, rally. It's in a pause mode. It is no doubt at major resistance, but the trend is still firmly up. It is riding up this 5-day moving average, which means it's a high momentum play. It still has momentum. It could pop and break out and run at any point, or it could roll over. And that's why we've locked in gains. We've moved our stop to entry price. If it rolls over, well, we lock in gains. We get out of a small winning trade. If it takes off, well, we stick with the trend, and we've got much higher upside targets for our Bitcoin play, which we're using IBIT for that. If anybody's, most people don't trade Bitcoin, but they'll trade the ETF for it because it's just a simpler way to do it. So yesterday I talked about the Fibonacci and how TEDx had a kind of a link, and how I live in this tropical paradise, and I got some amazing comments, some funny comments from, it's amazing how many of you live in Florida and in tropical places, but I live in the Great Lakes up in Canada, and we have a very small window of tropical weather. But I shared how I go spearfishing with my son, and I want to show you a clip of how tropical it can be in the summer here, and how vibrant, or we don't have a lot of seaweed where we are because of the shoals and the waves, but check it out. So the other day I mentioned how my son loves to spearfish and any type of fishing, and so we love to hop on the Sea-Doo and rip out on the horizon. There is a sunken ship on a shoal. It's only about 8 feet deep. So we topped up the Sea-Doo, we took off out there, and check it out. Oh, that's cool. Go.
I see fish under the boat.
What'd you get?
Crayfish, baby.
It's a big one. Beauty. One shot, 1 kill.